Good morning, good afternoon, good evening, and welcome to Martyn Lucas Investor. We're seconds away from Google earnings. In fact, we have half an hour before the call begins, but we're listening in to get the earnings report. I bought more today, a lot more. I'll tell you all about that shortly. We're watching very closely on Tesla and Google. We're paying close attention. The bell is just gone. There we go. Let's see what happens. We're keeping a close eye on the Google earnings. Why haven't we gone out to the earnings? Let me just see what's going on. Are we live? Yes, we are live. I was thinking for a moment it wasn't live there. We've not shown up on the main screen. Let me go and you see the big screen behind me? It's not showing up, but that's okay. We're live. All right, so we're on standby. I'll tell you what I've done in a moment. I've been buying big today. I'll tell you why later. And stocks ending the day higher. Any second now we'll get the earnings for Google. The president announcing a trade Here we go. What's this now? And reports the U.S. may be close to an agreement with the EU. Yep. This is the 12th closing record in 2025 for the S&P. That's why I bought today because of that news. I'll give you more information on that shortly as well. But we're getting excited the highest level in a month. For Google. Lower. Silver also ending. I'm just trying to keep away from the audio coming out of ticking a bit higher today. This broadcast. Scorecard on Wall Street, but winners stay late. Welcome to Closing Bell Overtime. I'm John Ford alongside Stop the music. Morgan Brennan. Ahead, a long list of earnings coming your way, including the first two of the Mag 7 names, Alphabet and Tesla. Yeah. Just give us the numbers. IBM, ServiceNow, and T-Mobile.
Well, speaking of T-Mobile, we'll have an exclusive interview with the CEO.
You can see how things are moving. There's my portfolio exploding today. I'll tell you why I bought what I did. Very good day, record day. Awaiting Google.
The S&P hits another all-time high. Progress on the trade deals and better than expected earnings so far this quarter, continuing to fuel optimism.
We're always enjoying hearing about if they mention YouTube and if they mention me.
Fixed income.
I'm only joking.
Welcome. So, I mean, all-time highs. Keep pushing here. The meme stock type feel has reignited, though.
There's my portfolio, all-time high. I bought a lot more today. I'll tell you why in a minute.
Investors are definitely experiencing FOMO, and the market's supported by three drivers. That's retail buying, strong earnings, and
Google any second now.
Here we go. Hey, $50 billion come into the market over the past month from retail buyers. Second is the
bloody hell! Look at that.
Estimates coming into this quarter were for just less than 5% earnings growth year over year. We're already beating that. I think we'll learn today that tech is going to lead the way in continuing to beat that. Then Liberation Day 2.0.
This does not mean it's the price.
Trickling in has not been a disappointment for the markets. About 15% tariffs is within expectations.
I haven't got the numbers yet. It's pre-numbers.
12th new high for the year.
Alphabet earnings are out. We are going through them. We'll bring them to you as soon as they're ready. So speaking of, does that mean we can keep buying tech?
Pay attention.
Investors out there right now?
Well, Alphabet, what we're going to be looking for is pressure on their search results because of new
all-time high, 260,000, 261, another all-time high, another all-time high. That's a brand new all-time high. I used some margin today. I'll tell you why in a minute. I'll tell you why. I'll tell you what I did. Don't get too excited, though.
Tech can continue to lead.
There you
we'll
go.
see with Alphabet. Of course, Tesla, a bit of a different story.
Yeah, Sarah, we'll probably have to cut you
Numbers
off
aren't
here
out
as
yet.
we get those results. But in the meantime, shares of Alphabet are trading higher right now. To me, one of the most interesting things in the trading session today was that it was all of these power-related companies.
Stand by for the numbers. Tap the like button.
Alphabet earnings, we're ready to go. Mackenzie Segal.
Here we go. Here we go.
Hi, Mac.
Hey, Morgan, you've got Alphabet shares surging in the after hours, up about 1.3%
No,
now.
down again.
Let me get you those top and bottom line numbers. For Q2 revenue, it's coming in at $96.4 billion. That is a beat. The analyst consensus was $93.9 billion. On the bottom line, second quarter EPS was $2.31. That's also a beat. The market was looking for $2.18. We've also got another key figure, which is cloud revenue that landed above analyst expectations, coming in at $13.62 billion versus the $13.1 billion.
It's a nice beat, but not
keep digging through these numbers and
like last quarter. That's why it's selling.
Shares actually now trending a little bit lower, down 0.5%. Back to you guys.
Mackenzie, we'll be back to you as you get more. Sarah, I want to get your reaction to that.
Yeah, that's all I need. Okay, so a buying opportunity as far as I'm concerned. The S&P is up. Look, you can see it. So let me go through why I've been buying heavily today and tell you what I've been buying. So as you know, I'm 100% in the S&P 500. That is what we do on the show. But that has now dropped to 96% of my portfolio because I'm acquiring competition giveaway crypto, Bitcoin and XRP. I'm buying more to give away. We're doing more giveaways as we celebrate the 100,000 subscribers. So I want to buy more when it's undervalued and oversold. Now you can't get proper valuation on crypto, of course. It's not possible, but you can do your best judgment looking forward. So today I bought heavily on the S&P. I bought more S&P. I'll show you what I did. I've used some margin. I've turned margin back on. There you go. I'll show you my buying power. You can see how much margin I've spent today. $9,000. Very, very small amount for me. I can clear that very quickly. Within a month, I'll pay all that off. So it's okay when I get my income come in, I shall pay that off. So I'm not going more than 2 months borrowing money, but I'm quite happy to do that. The first $1,000 is free anyway. But in 3 weeks' time, I can pay that off. So I'm happy to do that. Why? Not because of the Google earnings, even though I knew the Google earnings would be good. I know that because I work for YouTube and I know they're increasing ad revenue spend. So I can always tell when Google are making more money because YouTube is a big part of that. So I knew that was going to be good, but it was mainly because Trump has done the deal with Japan. Europe is expected to come in line. So now we're pricing in success once again. So I wanted to buy a bit more of the S&P, so I did. If I go down here, I'll show you what I did. We've got 25 minutes before the call starts. If we go down here, you'll see today my history. I bought some more VU. How do you do? There you go. July the 22nd, I bought 5 yesterday at 579, and I bought 10 today at 580. Doesn't matter, they're all-time highs to me. 99% of the portfolio is $100 less than this, so it doesn't matter buying now. I've built a portfolio up, so that's kind of cool, right? Another 15 shares, another sort of $5, $6, $7, $8, $9,000. So I'm very, very happy with that. But that's not the big story of the day. The big story of the day is how I'm investing now in crypto for my giveaways. I want to have money to give away. So I bought on the drop today and I made money on it straight away. I bought Bitcoin. I've now got $4,300 in Bitcoin. A week ago, I had none. So it's quite a lot, as you can see, 1.92. Crypto wants to be 4% of my portfolio. That's it. No more, no less. And as it goes over 4, I shall trim. I shall keep it at 4% unless there's any reason why I would think differently. But that's my plan. So I'm just under 1.92 on portfolio allocation. If I go to my XRP, that went down today and it's still falling. I might buy a bit more because I've got a bit left to go there. $4,000, 1.77%. So I've got a little bit more I could buy there. So I might have a little nibble now. My average is 326. We're now at 318. Still falling. I see support at these levels. I'm very happy with this. I don't really care if it goes much lower. Doesn't really bother me. So I'm going to buy a bit more XRP right now live on the show. So where are we now? We want another 0.3%. So what's that? Another $500? So we're at 326. I can bring it down to 318. We're falling, so I'll buy another $500, $500 of XRP and buy. There we go. That should lower it to whatever it 3. There we go. Not now. No. That's now come down 326. I can't remember what it was before. Anybody remember what it was before? If I go back on my video, I can see what it was 10 seconds ago. What was my average? 326. Yeah, 326. I don't think it changed at all. Actually, I should have changed. That should have changed. That should have changed, shouldn't it? That might change in a minute. That average. I wonder if that's not refreshed. Let me come off. That should have changed a bit. XRP. Let me see if I'm right. Oh. I bet you that changes in a while. I don't know why that hasn't changed. I would have thought that would. Anyway, I've just lowered my average, even though it's not showing it. I would imagine it has. Let me have a look. What did I pay for that? Yeah, 320. Yeah, that should have come down. Yeah, look at that. It's quite a bit difference. Anyway, there you go. This is my giveaway money. This is what I'm using to donate for giveaways. So that's why I'm doing it. So I've lowered it. Now my allocation is 1.98. So I'm nearly at the 4%. So as my S&P grows, as you can see, it's growing now. As the S&P grows, I can buy more on XRP and Bitcoin. And if I want to trim when it goes above 4%, I can. I don't have to, but I can. All right, so that's the strategy there. Let me just go over to this screen a second and just clear away my notifications. This was a big event we covered today, Mobix Labs. This was a big surge today. As you can see on announcing, we had the CEO live on the show. If you've not yet seen that, we spoke directly with Phil, which is the CEO of the show. It's a members-only event. If you missed that, you missed a very important event today. Very, very important event. It was a live CEO announcement, and it was really well received. The investors loved it because this is what happened. If you missed this, you need to go and check this out. On the announcement of the CEO coming on the show, as always happens, we have world exclusive all the time, members only. We rallied 50%, and sometimes on the call that it sells off because people, just sell the profit. This was it. It started to sell off during the call. This was it today. And then this was the moment that Phil gave a really good answer, and everyone really liked it. In fact, it was red. It was down here. And it popped up a few percent. People really liked it and bought in. It's a very small company, very small market cap, 64 million. So when you got market caps this small and everyone's following, it can move it. And it probably did, because the moment he gave this really good answer, it was down here. We were like down a couple of percent, and now we've moved up. So we're up 3.48. It was like a 5% swing. Very, very good. I'm really, really happy for the Mobix team and Phil. It was great to see that happen live on the show. Anyway, there we go. Let me come back to that. Let's zoom in there. We're waiting for the Google call to begin. Very, very nice indeed. My portfolio is rallying a lot now. Google, opportunity to buy that. I've already bought it, anticipating today. So we can stand by. Now then, we've got 17 minutes before the call begins. Let me go and read all the comments. I'm excited. Something good. Goog is good. Yes, indeed. Hi all. Hello, hello, hello. Google, please don't fail me now. Hello, hello, hello. Martyn, how are you? Good afternoon from Lakeland, Florida. Hello, Kevin Hawthorne. Lovely to have you here. Maybe hit the mute. Maybe hit the mute. I'm not sure I know what that means. Great Mobix interview. Don't forget to check this out. Those who missed it. Oh, we're rallying now. We're rallying now. The S&P is rallying. Wonderful. My overall portfolio is rallying. I just bought more XRP a few seconds ago. Is that still going down? So as it goes down, it's holding there at the moment. Is Bitcoin going up? I've got a big position in Bitcoin. Yep, that's going up. If I go over the 4%, I can start to trim. The S&P is rallying. This is nice. What has Tesla done? Tesla are doing earnings at the same time. Tesla is rallying as well. It's great. Yeah, look at the market go. This is very, very good. The deal in Japan is done. The deal in Europe is just about done. This could be very, very nice. That's why I bought some more with margin. Just 1 month's worth of investment, that's all. Great Mobix interview. We got 15 minutes ago. Thank you, Vaz. If you've missed it, you really missed one that you really don't want to miss. Mobix Labs. This was the event here. It was a members-only event today for the first hour, and then it went general subscribers. So it's still showing in the members-only live stream. If you want to go and check this out, strongly recommend you do. Great performance here from the CEO of Mobix. We're very proud of him. He did well. Here's the Mobix interview. You need to see this. It's now available to all subscribers. Meet the CEO. Now available to all. Oh, Tesla is pumping. Must watch. There you go. There it is. Let me drop that there. Pin that there. All right.
Q2 for postpaid net additions and postpaid phone net additions. Huge record for us, but at the same time, financials beating expectations, and we're moving guidance up. So it really shows that the model, the durable advantages of T-Mobile are firing on all cylinders.
Good. So your guidance reflects the inclusion of Metronet. It excludes the acquisition of U.S. Cellular. How to think about your portfolio moving forward now that you did just make this, you did just close this acquisition, and also just strike a partnership with our parent company, Comcast and Charter, for business customers starting in 2026?
Well, let's start with that cable partnership.
All right, we're going to leave that for the minute. We can't cover T-Mobile right now. We're focusing on 15 minutes before Google. The overall portfolio is exploding. Look at that, $1,700 today. Absolutely great. I'm not buying this now. I've already bought it. This is wonderful. I've used some margin. I wanted to get this today. So there you go. Google is the boss. I use so much Google. Yes, indeed. Google. Glad I bought at 150. Also now pays dividend and earns a lot of money. Wow, 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 wow. I'm loving it, loving it, loving it. The overall portfolio, we're now up to 261. 261, that's another all-time high. Another all-time high. My portfolio is coming up to $250,000. We started with $5,000, no options, no shorts. I do now have a little bit of crypto, which I'm buying to give away. If you want to know about the giveaway, ask me in the chat. I'll give you the link. We're giving away, live on the show, $1,000 of XRP. No purchase necessary. It's my own money. I'm giving it away. Not just mine. It's a third of it is Vaz's, a third of it's mine, and a third of it is Sensei's. We're giving away $1,000, free to enter, free for all. Just put in the chat, tell me about the giveaway, and I will give you the link. If everybody knows about it, there's no point repeating it. But if everyone if anybody wants to know, say in the chat, tell me about the giveaway, and I will post it in the chat to you. All right. Top 40, Google. What a fast drop. It's not a beat, it's a beat. It's not a beat, it's a beat. I don't get it. Retirement account is loving, loving, loving it. YouTube premium customer. Yes, me too, believe it or not. I pay to avoid the ads as well. Very important that. It's going below $3. Pointless buying. No, it's not pointless at all. I don't buy prices. Stu, I buy value. Not interested in the price. You're focusing on the price. I'm focusing on the future value. Couldn't care less if it goes to $1. I couldn't care less. It doesn't make a difference. In fact, it's really funny today. I had some trolls on X going, I hope it goes lower, because I bought all this Bitcoin in XRP. And I replied back, so do I. I've got $250,000 to buy the dip. So I hope it does go to $1. In fact, I hope it goes to 1 cent. I know what I own. There's a difference. I don't mind it going down. It doesn't even bother me. It doesn't even affect my portfolio at 4%. It makes no odds at all. All right. Okay. So just so you understand, it doesn't matter to me if it goes down. In fact, I hope it does go down, because it presents an opportunity for me to buy more of what I want. And that's why my portfolio is consistently beating the market, consistently making money. And I'm very happy with that decision. All right. NVIDIA shooting up on Google's spending forecast. Why is Alphabet going down? It's on earnings. It's always expected. People take profits. When they take profits, I buy it. This is exactly what I just done. Google, be all about guidance. Trash stock, man, I hate ITB. I don't even know what that is. Google, $200. Tech so far shown pretty decent guidance through these earnings calls this quarter. I agree, Cedar. We now can value the S&P at a good buy at 20 times earnings, no longer 17. So we're not that far away on a forward PE. So there's still room to buy in the stock market, which is why I turned on some margin and bought. All right. So anyway. Tell me about the giveaway. Oh, Logan G wants to know about the giveaway. Okay, I'll tell you all about it. Tell me about the giveaway. Okay, tell me about the giveaway. All right, space is looking... All right, so essentially what we're doing, we are about to hit 100,000 subscribers, and to celebrate, we want to give some money away. It's free to enter, free for all. You haven't got to be a member. You haven't got to do anything. We just want to give it to you. So do you want to win some money? It's really easy. And in fact, it's really easy to win if you're not lazy. A lot of people are lazy and they can't be bothered. So here's how you can enter. So first of all, are you a subscriber? Are you a subscriber to the channel? You don't need to be a subscriber, but if you are, you'll be notified when we do the live draw. If you're not a subscriber, you won't, because you'll miss it. And if you're not present, then you'll miss it. So you want to make sure that you are indeed a subscriber. Okay, so are you subscribed? That's part number one. In fact, in a minute, you'll get tickets for doing that to win at the $1,000. All right, so very, very important. We are now at 92,478 subscribers. So consider subscribing. 100,000 around the corner, and we're going to give away $1,000 of XRP. Oh, there we go, 92,480. Now, if you tap the like button, we hope you have. If you've tapped the like button, that will help as well. I'll explain in a second. Here's our XRP. It's going down nice. You're trying to show some support at this level. Right, this is how you enter. I'm going to replace the pin. In fact, I'm not going to replace the pin. I'm going to put it here. martynlucas.com/giveaway. Here is the competition page. Now, before you click on it, let me explain to you how it works. All right. How long have we got? We've got 9 minutes. Okay. martynlucas.com/giveaway. Here is the competition page. It's free to enter. It's free for all. We're giving $1,000 of XRP live on the show, paid out to you live. You can sell it for cash if you want. It might even be $2,000, as we do have somebody who wishes to match as well. So it might be $2,000, but in our terms and conditions, it's $1,000. How do you win? Pay close attention to this. Most people don't listen, and that's why it's actually easy to win if you listen to what I say, because most people don't do what I'm about to say. The competition ends on September the 15th in 53 days' time at 3 p.m. Central Daylight Time. The draw will take place live on this channel. You need to be present to win. Here is the intro video. There are tickets to win by watching this. So there is the link. Then this will tell you, whoopsie daisy. This will tell you all about the competition, and these are our sponsors. There's Sensei, me, and there's Vaz. And also, on top of all of that, it will give you tickets to help you win. Because every time you do something, you win free tickets. You win free tickets, and you can win with one ticket, or the more you have, the more chances that you've got. So pay close attention, and you can learn how to get more tickets. We've got 8 minutes to go before the call starts. I won't miss it. You will be on time. Don't worry about it. Okay, so here is the giveaway. This video, it will give you tickets. New ways to enter added daily on the website. Every day we add new tickets. So every day you come back, you get more. It's fun, it's free. More entries give you better odds, but you can win with just one ticket. Good luck from me, Sensei, and Vaz. That's the 3 people that are sponsoring this giveaway. There is the YouTube channel. There is the video. There are currently 19 ways to win. Every day we add new ones, so don't miss out. All right, the daily bonus. Every day you get free tickets. Subscribe to Sensei's Insights. Now, it's a paid newsletter, but you don't pay. You can sign up for free. Everything here is for free. You don't pay to enter. You don't have to be a member. We're just celebrating our portfolio, celebrating our channel, and we're giving away free money, basically for free. All you've got to do is take part. Okay, if you post on X, there's a post here. You click it, you sign in. We do everything we can to keep out bots and trolls, stuff like that, scammers. So you have to sign in through X or YouTube or whatever you like to be able to engage with this giveaway. Post on X, you get 100 points. Follow me. If you've already followed me on X, you'll be able to claim your points because it logs you in. It knows you followed me on X, and then you can claim the points. If you haven't followed me, you can't. And if you unfollow me, you'll lose the points. That's how it works, right? So you get 100 points, 100 tickets by following me. If you follow Vaz, you get 100 tickets. If you repost this, you get 50 tickets. Repost on Blue Sky. Create an account, it's free, you get 50 tickets. Enter here the magic number. Now, I'm going to explain this because most people just do not do this properly and they miss out on the tickets. Let me tell you what you do. It says here, enter here only, not in the chat or comments. No one listens. They post it on X and they tell everybody the answers. Silly, really. But anyway, the magic number found in the intro video. We give you 3 numbers, one at the beginning, one in the middle, and one at the end. Add them together. Not 3 separate numbers. Add them together. Then post here to win tickets. All right, click here. There's the video, and you put in the number. So if you go 777, wrong answer. Now, you can't guess because there's millions and millions of numbers it could be, all right? So don't just try and guess. You'll be there forever. What else is there? You can follow me on TikTok. You can, when you go and subscribe to me on the music channel, Martyn Lucas on YouTube, Martyn Lucas Investor. So if you subscribe to me on my channels, you get 10 more points. Follow on Blue Sky, visit the Facebook and follow me there. You get the idea. Follow on TikTok, Instagram, and all the rest of it. So that's how. Now, we've just entered 2 new ones. If you repost this, you get 20. And here's another one. If you enter this one, you get 50 tickets. All right? So what's this all about? This is XRP. The secrets are out. All right? So what you do, Martyn will give you 3 numbers, one at the beginning, one at the middle, one at the end. Watch it all the way through, add the numbers. So you can do as little or as much as you want. It's entirely up to you. We've got 4 minutes before the call starts, and we've given away so far 84,000 tickets. Now, you might say, what are the odds of winning? Well, I'll share with you. I'll actually show you on the screen what the odds are of winning if you do it properly. I will show you. Let me go to reporting. Here we go. Just give me a second. And here we go. So look at this, folks. This is behind the scenes of the competition. This is how transparent we are on this show. Only 219 people have taken part to win $1,000. That's all. 219 people. Can you believe it? That is all the number. Now, how many people have done everything? How many people have got the maximum number of tickets? How many people do you think? Top users. Let's have a look. Justin Duke has done everything. 763, 763, 763, 763, 763, 763, 763. That's it. 1, then we go down to 762. So 1, 2, 3, 4, 5, 6, 7 people. Only 7 people have done everything. 26 actions. Only 7. And that is Justin Duke, David Hensley, Seth Houston, Kathleen Coyle, JD, and Ian Mills. They are the only ones who have done all the actions. 1, 2, 3, 4, 5, 6, and Renee Zanon as well. So it's easy to win, potentially, if you do all the things. Only 7 people. So that's how it works. Right, we've got Google earnings in 2 minutes. We are on standby, ready to go. Okay. So I'll give you the link. It's martynlucas.com/giveaway. It's in the chat. You can enter. Free to enter. Free for all. Why anyone would down like that, I've no idea. We've got 4 people who've just down liked the video. It's not more people. It's the same 2 people that come in every day to down like everything. They live in a world of nothingness and they think it's funny and they're going nowhere doing nothing, but they seem to like it there. So I doubt if they have entered our competition. But of course, they could win also. Why anyone would down like, I have no idea. So please tap the like button, share this video out, and take part in our giveaway. Has everyone liked it so far? Not many people, actually. Only 41 people have liked me giving away $1,000 of my own money. I find that hard to understand, but there you go. Things in life baffle me every day. People say, it's a scam, it's not real. Well, it is real. It's my real money. And take it or leave it. I don't care. Don't bother me. I certainly hope someone wins, but it doesn't make me richer if you win money off me. All right? I don't, But yeah, there are some people who go, yeah, it's a scam. Martyn gets something out of it. I've not. If anyone can work out what I get out of giving away my money, please let me know, because I've not been able to work it out yet. But there's those on YouTube, there's those on X who are trying to sort of suggest there's some reason why I can win by giving you my money. I've never quite worked it out, but anyway, there you go. Here we go. We've got 30 seconds to go. Here's the call for Google. Here's the call for Google. All right. They're playing some scenes at the moment.
It's just like
a bit of music. We don't want the music. We'll turn that down. That's a bit loud as well on Google. We'll turn that down. So we're on standby. There's the earnings call. In fact, I'm just going to mute that. I don't want any audio to come through that we don't need. Okay, I've got the audio muted. Now, somebody earlier, who was it who requested QS earnings? Who was it who requested QS earnings? You win satisfaction. Yes, I do. I love helping people. I love giving money away. I do. I can't think of anything bad, though, as some people would suggest. Great Mobix interview. Sadavi, thank you so much indeed. What an opportunity that was today. It pumped into the news, it trimmed and then started going up on that big question was answered. Really, really great. Could be a historic week for content. You tell me. I think so. Just send a like. 25 whipped from MC in less than a day. I'm not sure I know what that means. Well, Fredo, hey up Vaz. Thank you, Martin. Good to hear a British voice. Thank you.
Thank you for standing by for the Alphabet second quarter 2025 earnings conference call. At this time, all participants are in a listen-only mode. After the speaker presentation, there will be a question and answer session. To ask a question during the session, you will need to press star 1 on your telephone. I would now like to hand the conference over to your speaker today, Jim Friedland, Head of Investor Relations. Please go ahead.
Thank you. Good afternoon, everyone, and welcome to Alphabet's second quarter 2025 earnings conference call. With us today are Sundar Pichai, Philip Schindler, and Anat Ashkenazi. Now, I'll quickly cover the safe harbor. Some of the statements that we make today regarding our business, operations, and financial performance may be considered forward-looking. Such statements are based on current expectations and assumptions that are subject to a number of risks and uncertainties. Actual results could differ materially. Please refer to our Forms 10-K and 10-Q, including the risk factors. We undertake no obligation to update any forward-looking statement. During this call, we will present both GAAP and non-GAAP financial measures. A reconciliation of non-GAAP to GAAP measures is included in today's earnings press release, which is distributed and available to the public through our investor relations website located at abc.xyz/investor. Our comments will be on year-over-year comparisons unless we state otherwise. And now, I'll turn the call over to Sundar.
Thanks, Jim. Good afternoon, everyone. Q2 was a standout quarter for us with robust growth across the company. As you saw at I.O., we are leading at the frontier of AI and shipping at an incredible pace. AI is positively impacting every part of the business, driving strong momentum. This quarter, Search delivered double-digit revenue growth. Our new search features continue to perform well. AI Mode has launched in the US and India and is going well, while AI Overviews now has over 2 billion monthly users across more than 200 countries and territories and 40 languages. I'll give some more details on search in a moment. We continue to see strong performance in YouTube as well as subscriptions, reflecting great momentum across these high-growth businesses. In the US, Shorts now earn as much revenue per watch hour as traditional in-stream on YouTube. And in some countries, it now even exceeds in-stream's rate. Cloud had another great quarter of strong growth in revenues, backlog, and profitability. Its annual revenue run rate is now more than $50 billion. We are seeing significant demand for our comprehensive AI product portfolio. Of course, this is all possible because of the long-term investments we have made in our differentiated, full-stack approach to AI. This spans AI infrastructure, world-class research, models and tooling, and our products and platforms that brings AI to people all over the world. I'll briefly touch on the AI stack before turning to quarterly highlights. First, AI infrastructure. We operate the leading global network of AI-optimized data centers and cloud regions. We also offer the industry's widest range of TPUs and GPUs, along with storage and software built on top. That's why nearly all Gen AI unicorns use Google Cloud. And it's why a growing number, including leading AI research labs like Safe Superintelligence and Physical Intelligence, use TPU specifically. Our AI infrastructure investments are crucial to meeting the growth in demand from cloud customers. Next, world-class AI research, including models and tooling. We continue to expand our Gemini 2.5 family of hybrid reasoning models, which provide industry-leading performance in nearly every major benchmark. In addition to improving our popular workhorse model Flash, we debuted an extremely fast Flashlight version. We achieved gold medal level performance in the International Math Olympiad using an advanced version of Gemini with DeepThink. We can't wait to bring DeepThink to users soon. We have some of the best models available today at every price point. Our 2.5 models have been a catalyst for growth, and 9 million developers have now built with Gemini. I also want to mention Veo 3, our state-of-the-art video generation model. It's been a viral hit, with people sharing clips created in the Gemini app and with our new AI filmmaking tool, Flow. Since May, over 70 million videos have been generated using Veo 3. And we recently introduced a feature in the Gemini app to turn photos into videos, which people absolutely love. It's also rolling out to Google Photos users starting today. Third, our products and platforms. We are bringing AI to all our users and partners through surfaces like Workspace, Chrome, and more. The growth in usage has been incredible. At I/O in May, we announced that we processed 480 trillion monthly tokens across our surfaces. Since then, we have doubled that number, now processing over 980 trillion monthly tokens, a remarkable increase. The Gemini app now has more than 450 million monthly active users, and we continue to see strong growth in engagement, with daily requests growing over 50% from Q1. In June alone, over 50 million people used AI-powered meeting notes in Google Meet. And powered by Veo 3, our new short video product in Workspace called Google Vets reached nearly 1 million monthly active users. This month at Samsung Galaxy Unpack, we announced new Android and AI features that are available on Samsung's latest devices. And we are really pleased with the growth in subscriptions, which got a boost from our Google AI Pro and Ultra plans. Now some key highlights from Search, Cloud, YouTube, and Waymo for the quarter. First up, this is an incredibly exciting moment for Search. We see AI powering an expansion in how people are searching for and accessing information, unlocking completely new kinds of questions you can ask Google. Overall queries and commercial queries on Search continue to grow year over year. And our new AI experiences significantly contributed to this increase in usage. We are also seeing that our AI features cause users to search more as they learn that search can meet more of their needs. That's especially true for younger users. Let me go deeper on our new search experiences. We know how popular AI overviews are because they are now driving over 10% more queries globally for the types of queries that show them. And this growth continues to increase over time. AI overviews are now powered by Gemini 2.5, delivering the fastest AI responses in the industry. We also saw strong growth in the use of multimodal search, particularly the combination of Lens or Circle to Search together with AI overviews. This growth was most pronounced among younger users. Our new end-to-end AI search experience, AI Mode, continues to receive very positive feedback, particularly for longer and more complex questions. It's still rolling out, but already has over 100 million monthly active users in the US and India. We plan to keep enhancing the AI Mode experience for users by shipping great features fast. That includes our advanced research tool, Deep Search, and more personalized responses. Next, Google Cloud. We see strong customer demand driven by our product differentiation and our comprehensive AI product portfolio. 4 stats show this. 1, the number of deals over $250 million, doubling year over year. 2, in the first half of 2025, we signed the same number of deals over $1 billion that we did in all of 2024. 3, The number of new GCP customers increased by nearly 28% quarter over quarter, or more than 85,000 enterprises, including LVMH, Salesforce, and Singapore's DBS Bank now built with Gemini, driving a 35x growth in Gemini usage year over year. Our models are served on our AI infrastructure, which offers industry-leading performance and cost efficiency for both training and inference. Along with our AI accelerators, we introduced new innovations in storage, including Anywhere Cache, which improves inference latency by up to 70%, and Rapid Storage, which delivers a 5x improvement in latency compared to leading hyperscalers. In addition, we have optimized AI software packages, including PyTorch and JAX, with full open source supports for various AI training and serving demands. We've also integrated AI agents deeply into each of our cloud products. Wayfair is leveraging our databases integrated with AI to streamline data pipelines and deliver more personalized customer experiences. Mattel is leveraging our Gemini-powered data agents and BigQuery to review and act on product feedback more quickly. Target is using our Gemini-powered threat intelligence and security operations agents to improve cybersecurity. Capgemini is utilizing our AI software engineering agents to deliver higher quality software faster by automating tasks from code generation to testing. And BBVA says Gemini in Google Workspace is saving employees nearly 3 hours per week by automating repetitive tasks. It's now rolling it out to 100,000 employees globally. We are also focused on building a flourishing AI agent ecosystem. We introduced an open source agent development kit, which now has over 1 million downloads in less than 4 months. We also introduced Agent Space, an open and interoperable enterprise chat, search, and agent platform. Gordon Food Service is bringing Agent Space to its US employees, which is enabling better, more efficient decision-making. And over 1 million subscriptions have been booked for Agent Space ahead of its general availability. Turning now to YouTube. Nielsen data shows YouTube has led US streaming watch time for over 2 years. A generation that grew up with YouTube on their devices is now increasingly watching their favorite creators' content on their television. That includes millions of sports fans too. Globally, they consume more than 40 billion hours of sports content on YouTube annually. And in September, we'll stream the NFL's first Friday game of the season live from Brazil. From sports to shorts, we now average over 200 million daily views on YouTube Shorts. AI is helping improve our recommendations and auto dubbing, which translates to better returns for creators and brands by dramatically increasing the potential audiences they can reach. And today we began rolling out a whole raft of new AI tools for creators on YouTube Shorts. Finally, YouTube continues to diversify its subscription options, recently expanding its premium light offerings to 15 new countries with more to come. And lastly, Waymo continues to scale and expand to safely serve more riders in more places. Last month, Waymo launched in Atlanta, more than doubled its Austin service territory, and expanded its Los Angeles and San Francisco Bay Area territories by approximately 50%. Waymo also launched teen accounts, starting with riders aged 14 to 17 in Phoenix.
And Waymo is not priced into Google, by the way.
The Waymo driver
Just bear
has
that in
now
mind.
autonomously driven over 100 million miles on public roads. And the team is testing across more than 10 cities this year, including New York and Philadelphia. We hope to serve riders in all 10 in the future. As I said, a standout quarter. A big thank you, as always, to our employees and partners for an amazing Q2. Philip, over to you.
Thanks, Sundar, and hello, everyone. I'll quickly cover performance for Google services for the quarter, then structure the rest of my remarks around the great progress we're delivering across search, ads, YouTube, and partnerships. Google services revenues were $83 billion for the quarter, up 12% year-on-year, driven by strong growth in search and YouTube, partially offset by year-on-year decline in network revenues. To add some further color to our results, The 12% increase in search and other revenues was led by growth across all verticals, with the largest contributions from retail and financial services. YouTube saw similar performance across verticals. Its 13% growth in advertising revenues was driven by direct response, followed by brand. Starting with search and other revenues, which delivered over $54 billion in revenue for the quarter. Shifts like AI are what propels our industry forward. Gemini's native multimodality is helping bring the offline audio and visual world back into the online world, creating a number of opportunities for search. Let me share a few examples. Take visual queries. Google Lens searches are one of the fastest growing query types on search and grew 70% since this time last year. The majority of Lens searches are incremental, and we're seeing healthy growth for shopping queries using Lens. And you can obviously take this to the next level by moving from image to video-based capabilities like Search Live. And then there's Circle to Search, which is now on over 300 million Android devices. We've been adding capabilities to help people explore complex topics and ask follow-up questions without switching apps. For example, gamers can now use Circle to Search while playing mobile games to see an AI overview for answers. And just last week, we brought a new agentic capability directly into search for all US users with AI-powered calling to local businesses. Finally, shopping, where in Q2 we introduced a virtual try-on experience for Search Labs users in the US. Now people can try billions of clothing products on themselves virtually. Early results and engagement have been extremely positive, particularly with Gen Z users, and we'll be bringing this functionality to all US users imminently. All these innovations are opening up completely new ways for people to use technology, bringing the offline world into the online world in ways that simply have not been possible before. Add in our amazing AI translation capabilities and just imagine the possibilities. People can access more content in the language, and businesses, large and small, international or local, can reach even more customers. I'm excited about how all of these elements will come together and the opportunities ahead of us in search. Moving to ads, where our strategy to reinvent the entire marketing process with AI is delivering value for our customers and our business. Last quarter, we introduced AI Max in Search, a new suite of AI-powered features in existing search campaigns. Advertisers that activate AI Max in Search campaigns typically see 14% more conversions. On media buying, smart bidding exploration, the biggest update to bidding strategy in a decade, brings better performance to advertisers by allowing them to bid on less obvious but potentially higher value queries more often. Campaigns using smart bidding exploration see a 19% increase in conversions on average. Demand gen continues to drive revenue growth and deliver measurable impact for our customers. As an example, Depop, Etsy's resale clothing marketplace, used a shorts-only demand gen campaign to drive new customers to the site. Shorts drove 80% higher brand lift and double click-through rates versus benchmarks. On creatives, we launched Asset Studio, using our latest models to help businesses, large and small, generate creative assets. Small businesses benefit from top quality assets and deployment scaling capabilities, but larger businesses can go faster from proof of concept to launch and resize at lower costs. Over 2 million advertisers now use Google's AI-powered asset generation tools to run ads, a 50% increase on this time last year. Turning to YouTube, where we saw continued strong revenue growth, driven by direct response followed by brand. YouTube creators are connected to the global zeitgeist and trusted by their audiences like no others. As part of Brand Connect, we launched Creator Partnership Hub, which allows brands to more easily work with the right creators and tap into cultural moments. We introduced Veo 3, photo to video and generative effects to shorts, making content creation easier and offering unexplored avenues for creativity. We're seeing both the volume and the price of ads and shorts increase, particularly in developed markets. The feed-based nature of the product allows for more ad opportunities on average, and this growth is further supported by ad formats native to shorts, AI-powered ad creative resizing tools, improved ad targeting, and the rise in viewer engagement. McDonald's USA harnessed the influence of YouTube creators to ignite awareness for the Minecraft movie meal. It leveraged YouTube Shorts partnership ads to increase its reach, generating a 3.3 times higher view-through rate than the industry benchmark. Finally, on CTV, where the momentum continues. According to the Gauge report by Nielsen, YouTube has been #1 in streaming watch time in the US for more than 2 years, hitting a record high of 12.8% of total TV viewing in June 2025. In the past 12 months, YouTube ads viewed on CTV screens drove over 1 billion conversions. We saw strong growth in retail thanks to CTV shopping ads, which allows viewers to shop directly via QR codes, helping us leverage direct marketing opportunities. As always, I'll wrap up with the momentum we're seeing in partnerships, where customers increasingly recognize the strength and breadth of Google's ability to help them transform their business with AI. For instance, a new partnership with PayPal will improve the digital commerce experience for their merchants and customers. PayPal will expand its Google Cloud adoption for AI-driven recommendations.
Somebody's trying to win tickets to win $1,000 XRP.
The partnership also broadens the availability and functionality of PayPal's payment services and capabilities across a range of Google products. In closing, I'd like to thank Googlers everywhere for their contributions and commitment to our success, and to our customers and partners for their continued trust. Anat, over to you.
Thank you, Philip. My comments will focus on year-over-year comparisons for the second quarter, unless I state otherwise. I will start with results at the Alphabet level, and will then cover our segment results. I'll end with some commentary on our outlook for the second half of 2025. We had another solid quarter in Q2. Consolidated revenue of $96.4 billion increased by 14%, or 13% in constant currency. Search and YouTube advertising, subscription platforms and devices, and Google Cloud each had double-digit revenue growth this quarter, reflecting strong momentum across the business. Total cost of revenue was $39 billion, up 10%. Tech was $14.7 billion, up 10%, and other costs of revenue was $24.3 billion, up 10%, with the increase primarily driven by content acquisition costs, largely for YouTube, followed by depreciation. Total operating expenses increased 20% to $26.1 billion. The biggest driver of growth was expense for legal and other matters, which reflected the impact of $1.4 billion charge related to a settlement in principle of certain legal matters. R&D investments increased by 16%, primarily driven by increases in compensation and depreciation expenses. Sales and marketing expenses increased 5%, primarily reflecting an increase in advertising and promotional expenses. Operating income increased 14% this quarter to $31.3 billion, and operating margin was 32.4%. Operating margin benefited from strong revenue growth and continued efficiencies in our expense base, partially offset by the legal charge I mentioned earlier, and a significant increase in depreciation expense. Net income increased 19% to $28.2 billion, and earnings per share increased 22% to $2.31. We generated free cash flow of $5.3 billion in the second quarter and $66.7 billion for the trailing 12 months. Free cash flow in the second quarter was affected by a sizable sequential increase in CapEx and cash tax payments, as we make federal tax payments in the second quarter for both Q1 and Q2. We ended the quarter with $95 billion in cash and marketable securities. Turning to segment results, Google Services revenues increased 12% to $82.5 billion, reflecting strength in Google Search and YouTube advertising and subscriptions. Google Search and other revenues increased by 12% to $54.2 billion. Search and other revenues delivered growth across all verticals, with the largest contributions coming from retail and financial services. YouTube advertising revenues increased 13% to $9.8 billion, driven by direct response advertising, followed by brand. Network advertising revenue of $7.4 billion were down 1%. Subscription, platforms, and devices revenues increased 20% to $11.2 billion, primarily reflecting growth in subscription revenues. This growth was driven by YouTube subscription offerings, followed by Google One, with growth in paid subscriptions being the biggest driver of revenue growth. Google Service operating income increased 11% to $33.1 billion. Operating margin was flat year-on-year at 40.1%, as healthy revenue growth and continued efficiency in our expense base were partially offset by the legal charge I mentioned earlier. Turning to the Google Cloud segment, which delivered very strong results this quarter, revenues increased by 32% to $13.6 billion in the second quarter, reflecting growth in GCP across core and AI products at the rate that was much higher than Cloud's overall revenue growth, and growth in Google Workspace, driven by an increase in average revenue per seat and the number of seats. Google Cloud operating income increased to $2.8 billion, and operating margin increased from 11.3% to 20.7%. The expansion in cloud operating margin was driven by strong revenue performance and continued efficiencies in our expense base, partially offset by higher technical infrastructure usage costs, which includes the associated depreciation. As we ramp our AI investments, we continue to focus on driving improvements in productivity and efficiency to offset growth in technical infrastructure-related expenses, particularly from higher depreciation. Google Cloud backlog increased 18% sequentially in Q2 and 38% year-over-year, reaching $106 billion at the end of the quarter. This growth was driven by strong demand for our products and services from both new and existing customers. As Sundar mentioned, we have signed multiple billion-dollar-plus deals in the first half of the year. As to our other bets, in the second quarter, revenue were $373 million, and operating loss was $1.2 billion. Within other bets, we're allocating more resources to businesses like Waymo, where we see opportunities to create additional value. With respect to CapEx, in the second quarter, our CapEx was $22.4 billion. The vast majority of our CapEx was invested in technical infrastructure, with approximately two-thirds of investments in servers and one-third in data centers and networking equipment. In Q2, we returned capital to shareholders through repurchase of stock of $13.6 billion and dividend payments of $2.5 billion. Turning to our outlook, I would like to provide some commentary on several factors that will impact our business performance in the second half of 2025, as well as an updated outlook for full-year CapEx. First, in terms of revenues, we're pleased with the overall momentum we're seeing across the business. At current spot rates, we could see a tailwind to our revenue in Q3. However, volatility in exchange rates could affect the impact of FX on Q3 revenue. As for our segments, in Google Services, advertising revenues in the second half of 2025 will be affected by the following: the continued lapping of the strength we experienced in financial service verticals throughout 2024, and year-over-year comparisons will be negatively impacted by the strong spend on U.S. election in the second half of 2024, particularly on YouTube. In cloud, as I mentioned, the demand for our products is high, as evidenced by the continued revenue growth and the cloud backlog of $106 billion. While we have been working hard to increase capacity and have improved the pace of server deployment, we expect to remain in a tight demand-supply environment going into 2026. Moving to investments, given the strong demand for our cloud products and services, we now expect to invest approximately $85 billion in CapEx in 2025, up from a previous estimate of $75 billion. Our updated outlook reflects additional investment in servers, the timing of delivery of servers, and an acceleration in the pace of data center construction, primarily to meet cloud customer demand. Looking out to 2026, we expect a further increase in CapEx due to the demand we're seeing from customers, as well as growth opportunities across the company. We will provide more details on the 2026 CapEx outlook on a future earnings call. In terms of expenses, first, as I mentioned on our previous earnings call, the significant increase in our investments in CapEx over the past few years will continue to put pressure on the P&L, primarily in the form of higher depreciation. In the second quarter, depreciation increased $1.3 billion year-over-year to $5 billion, reflecting a growth rate of 35%. Given the recent increase in CapEx investments, we expect the growth rate in depreciation to accelerate further in Q3. Second, as we've previously said, we expect some headcount growth in 2025 in key investment areas. In the third quarter, we expect a sequential increase in total headcount additions, due in part to the hiring of new graduates. And third, Q3 will reflect the expense associated with the upcoming August launch of the new Pixel family of products. In conclusion, as you heard from Sundar and Philip, we're pleased with the momentum in the business and excited about the pace of innovation. Our full-stack approach, which combines AI infrastructure, AI research, and AI products and platforms, position us well to deliver new products and services across the company. We're seeing great momentum with our AI efforts, as demonstrated by the increase in cumulative token processed. Search revenues are seeing healthy growth, with features like AI Overviews, AI Mode, and Lens offering new ways for users to access the information. Cloud has reached an annual revenue run rate of more than $50 billion and is delivering margin expansion while continuing to invest to meet customer demand. And YouTube has expanded its addressable market by building new services like Shorts, which now averages over 200 billion daily views. We're excited to see the value our products and services are bringing to customers and partners around the globe. Now I'll turn the call over to the operators, and Sundar and Philip and I will take your questions.
Thank you. As a reminder, to ask a question, you will need to press *1 on your telephone. To prevent any background noise, we ask that you please mute your line once your question has been stated. Your first question comes from Eric Sheridan with Goldman Sachs. Your line is now open.
Thank you so much for taking the question. Maybe one for Sundar and one for Philip. Sundar, when you think about the journey you're on with respect to the evolution of products and platforms, how do you think about some of the implications of changed consumer behavior and how investors should think about that from the volume perspective versus the monetization perspective? Because I think there's a lot of long-standing dynamics out there about clicks and click monetization that might be very different when you look out over the next 3 to 5 years. And Philip, when you think about the evolution of YouTube, you made a number of comments there about subscription revenue. I'm just curious how you think about the mix of advertising versus subscription and what some of your key learnings might have been as the subscription side of the business continues to scale. Thank you.
Thanks, Eric. Appreciate the question. I do think looking ahead, based on everything we are seeing, it's people are excited about AI. They're adopting it well across our products. For me, just seeing multimodality, how people have modified their behavior to include images, both through Lens and Circle to Search, seamlessly as part of interacting with Google. Our early indications that people are going to be adopting through these moments very, very well. I think I'm trying to understand your question in terms of about clicks and click monetization. Maybe that's something Philip can touch on. But overall, we expect, as we build out our organic experiences, we have a good understanding of how to continue training on monetization, so that'll work well with the organic experiences. But we will lead with the organic experience. So in terms of newer surfaces like Gemini app, etc., we'll focus on the organic experience for the near term. But just like we are doing with AI Overviews and with AI Mode over time, we'll be able to bring very, very good commercial experiences there as well. And we think people will adapt to them as they've always done. Maybe Philip can add more. Philip?
Yeah. So on your question on YouTube subscriptions versus ads, look, I mean, we love our ads business. We love our subscription business. YouTube subscriptions are an increasingly important for YouTube. We'll definitely continue our long-term focus here. We had a strong growth across YouTube subscription products, which includes, just to be clear, YouTube TV, YouTube Music, and Premium. And I think one common theme for our subscription services in general is offering viewers more choice here. We also have a very
Can everyone tap the like button to share this out, please, and consider subscribing? Thank you very much.
Where can we potentially monetize?
Also, ask me about the $1,000 giveaway if you want to know about it. It's free to enter, free for all.
Strategy actively going forward.
Thank you.
Our next question comes from Doug Anmuth with J.P. Morgan. Your line is now open.
Thanks so much for taking the questions. One for Sundar and one for Philip. Sundar, can you just talk about how you're thinking about your current access to compute? Even as you spend $10 billion more this year in CapEx, you also said that you're still in a tight supply environment, so you're just trying to marry those. And then Philip, Phil, perhaps on search growth, can you talk a little bit about paid click and pricing growth just within the 12% search growth and how we should think about volume versus monetization trends going forward? Thanks.
Doug, thanks. On the CapEx stuff, obviously we are seeing strong momentum across our portfolio, and especially in cloud. You are right. It's a tight supply environment, and we are investing more to expand. But there is obviously a time delay between this additional investment will play out in future years, and so
I just bought very heavily into XRP. Huge drop.
At the same
time, I bought it,
and
now I'm outperforming the S&P today with my crypto investment.
It's exciting to see.
I'll show you later.
The traction, particularly in cloud. I think the comprehensiveness of our AI portfolio, the breadth of our offerings, both providing our models on GPUs and TPUs for our customers. All of that has been really driving demand, and so we are investing to match up to it.
And on your paid click question, look, to be very clear, I think we said this before, we manage the business to drive great outcomes for our users and an attractive ROI for our advertisers. We actually don't manage to pay clicks and CPC targets. Some of the product and policy changes we made.
Cedar Trees, I have to apologize. We had a power outage today. I was behind everything. I will explain later.
Paid clicks were up 4%.
Literally had the power outside blow up. I will explain. I couldn't do two earnings at the same time. I will explain in a moment. Please stand by.
Product changes,
I'm so sorry.
Changes, user
I'll make it up to you. I promise.
And so on. So it's really important when it comes to paid clicks and CPCs to avoid drawing like overly broad conclusions solely based on these metrics.
Thank you both.
Our next question comes from Brian Nowak with Morgan Stanley. Your line is now open.
Thanks for taking my questions. I have two. First one, Sundar, there's a lot of discussion about agentic search for commercial activities and agents that can be broadly deployed. Maybe could you just, from a technology perspective, when you sit down with the engineering teams working on some of these new agentic capabilities that could come, what are some of the predominant technological hurdles that you think need to be cleared in order to launch scalable agents for commercial queries is the first one. And the second one, I think in the past you've updated us on stats on sources of internal efficiency you've seen from Gen AI enabled capabilities. Any updates there, and then any sort of learnings on friction points that also need to be overcome for some of these internal tools with Gen AI? Thanks.
Thanks, Brian. Let me start with the first one on agentic capabilities. Look, overall, we are definitely, in many ways, when we built 2.5, our series of 2.5 models, particularly with Pro, etc., it's the direction where we are investing the most. There's definitely exciting progress, including in the models we haven't fully released yet. And the main gaps we are all trying to do is, you're obviously chaining a sequence of events, and so being able to do it reliably, the latency compounds, the cost compounds, and being able to do it reliably in a way for the users, all of this comes together. In each of this, we are making progress, and it all needs to kind of hang together. The good news is we are making robust progress. We think we are at the frontier there. And in all of these areas, when you look back in a 12-month basis, you end up making the models much more efficient for any given capability. So the forward-looking trajectory, I think, will really unlock these agentic experiences. We see the potential. We're able to do them, but they're a bit slow and costly and takes time and sometimes are brittle, right? But we're making progress on all of that. And I think that's what will really unlock. And I expect 2026 to be the year in which people kind of use agentic experiences more broadly, right? And so it's an exciting opportunity ahead. On the second part, I think when you say sources of internalization, I presume you're talking about how we are using all of this internally. Again, given you asked a question about agents, we are now beginning to roll out agentic coding journeys for our software engineers within the company. And it's been exciting to see just over the last few months, and particularly over the last few weeks, people are definitely doing more agentic workflows in software engineering as well internally. And that's a good example of the kind of the same experiences a few months ago had a lot of friction points, but we are overcoming it, and people are beginning to use internally on the coding side, as well as in certain other areas of the company as well. So exciting progress. I expect it to be an active area.
We also offer the industry's widest range of TPUs and GPUs.
Well, so look forward to it.
Thanks, Sundar. That's great.
Our next question comes from Michael Nathanson with MoffettNathanson. Your line is now open.
Thanks. Sundar, I have two for you. At I.O., you announced a partnership with Warby Parker to develop glasses. So I wonder if you share your view of how important a cycle of new devices will be to further scale AI, and do you envision a world in which the mobile phone is no longer central to our consumer experience? That's one. And secondly, how does Google Search with AI mode usage differ versus Gemini standalone apps? I'm wondering, are you seeing any differences in usage or the types of consumers who go to the app versus who go to traditional search with AI? Thanks.
Thanks, Michael. On the first thing, look, I think anytime I/O changes, you can drive new experiences, including on hardware experiences too. So I think AI will particularly enable, we've long had the promise of glasses and other form factors, but I think AI will spur a whole new wave of innovation there. We are super excited about our investment in glasses, and found the experiences have taken a dramatic step up compared to the last iteration. So I think it'll be an exciting new emerging category, but I still expect phones to be at the center of the experience, for the next 2 to 3 years at least. And so I still think that's going to be, phones would continue to be at the center of the consumer experience. But we are excited about the emerging categories as well. On your second question on AI mode versus Gemini standalone app, broadly, there are some use cases where you can get a great experience in both places. But there are use cases which are very specific. I think where the queries are, information oriented, but people really want to rely on the information, but have the full power of AI. I think AI mode really shines in that. You can go there and it's backed up. The Gemini models are using search deeply as a tool. And so it's all grounded in that search experience. And I think users are responding very positively to it. And whereas in the Gemini standalone app, you see everything from, people can have a long conversational chat just trying to pass time, right? And in the Gemini app, you've seen early cases where people may get into it, in a therapy-like experience, right? So these are all emerging experiences of what people do. And I think this is why I'm glad we have both surfaces and we can innovate in both of these areas. And of course, there'll be areas which will be commonly served by both applications. And over time, I think we can make the experience more seamless for our users.
Thanks, Sundar.
Our next question comes from Mark Shmulik with Bernstein. Your line is now open.
Yes, thanks for taking the question. Sundar, it seems there's almost like a daily news report about, the AI talent war and high-profile folks moving around, which is kind of like your perspective on how you think Google's been doing it, both kind of attracting and retaining key AI talent. And along with similar lines, how do we think about AI-related resourcing costs alongside kind of the step up in capital investments required to go build for AI? Thank you.
Mark, on the first question, look, I think we've gone through these moments before. We've obviously always deeply invested in talent, including in AI talent, for well over a decade now, and I think we have an extraordinary both breadth and depth of the talent. In my experience, the top people look for a combination of, they want to really be at the frontier driving progress. And so the mission and the and how state-of-the-art your workers matters. So that's super important to them. Access to compute resources and access to your peers.
I bought a lot of XRP a minute ago.
Best people in the industry, and it's a combination of all of that and using it to drive impact. And I think we are pretty competitive on all those fronts. And through this moment, we continue to. I look at both our retention metrics as well as the new talent coming in. And both are healthy. I do know individual cases can make headlines, but when we look at numbers deeply, I think we are doing very well through this moment. And we'll continue investing in the people and the talent and the compute needed to make sure we are set up well for the opportunity ahead. And maybe I'll pass it on to Anant.
Yeah, now the question on how we integrate this into our overall cost structure, and I've mentioned before, having the benefit of having the full stack includes research, which is our people, and one of our most critical resources. So we make sure that we invest appropriately to have the best, brightest minds in the industry sitting here at Google and advancing our innovation to customers. It is part of what you're seeing now in our operating expense line across the organization, but we're also working hard to offset not just growth and investment across the business, but also to ensure that we can allocate resources appropriately. So Sundar mentioned earlier the use of AI tools within the company. So that's another area where we can drive efficiency across the business, is to use these tools internally in terms of how we run the organizations. And then we're continuing on the same efforts that I've talked about before with regards to running the company with a high level of discipline and execution and driving efficiency across the business.
Our next question comes from Ross Sandler with Barclays. Your line is now open.
Great. If I can ask two, that'd be great. So the first one's on search click-through rates as a driver of monetization. So you guys have done a great job over the past decade of driving better ad relevancy and higher click-through rates in search. Just curious, as we look forward and we see lower ad impressions per SERP, and all these things that are changing with AI overviews and different AI search formats, how do you feel about your ability to drive CTR going forward? And then the second question is, it looks like you're now working with OpenAI for some aspect of cloud infrastructure. Just curious how that relationship might expand in the future. Thank you.
I can take the first one. Look, specifically referring to the AI overviews, if I understood your question correctly, Sundar mentioned it. They continue to derive higher satisfaction. They continue to drive higher search usage. They're scaling up very nicely, and they're actually working for our entire user base now, scaled to over 2 billion users in over 200 countries. So very happy with this development. And when it comes specifically to the monetization of it, we talked about it before. We see monetization at approximately the same rate, which gives us actually a really strong base on which we can then innovate and drive actually a more innovative and new and next generation ad formats. That's how we look at it at this moment in time.
On the second part, with respect to OpenAI, look, we are very excited to be partnering with them on Google Cloud. Google Cloud, is an open platform, and we have a strong history of supporting great companies, startups, AI labs, etc. So super excited about our partnership there on the cloud side, and we look forward to investing more in that relationship and growing it there.
Our next question comes from Mark Mahaney with Evercore. Your line is now open.
Okay, two questions, please. First, could you just describe, maybe, Philip, what you see in terms of the ad environment, maybe for the back half of the year, maybe versus last year? Does it seem as, certain or as uncertain as it was last year? The results seem pretty strong. Are there any unusual concerns you would have for the back half of the year? And then, Sundar, I want to ask you again about the two surfaces approach to search. And, you obviously got you must have some internal metrics that tell you that that's that's the optimal way for you to approach the market. But, I'm sure there's a counter argument that just having that unified search and being able to discern the intent of the search, whether it's pure information or commercial, just from the query, that could give you a material advantage over other offerings in the market. Just talk a little bit about what metrics you've seen that make the two-surface solution seem to be optimal. Thank you.
So let me start. Look, we said our ads business performed strongly in Q2. Give you maybe some vertical color of it. In Q2, search and other performance was led by growth across all verticals. We mentioned the largest contributions from retail and financial services, which was primarily due actually to strength in insurance. We saw healthcare as a sizable contributor to growth as well. Look, we're only a few weeks into Q3, so I think it's really too early to comment on anything happened in the second half of the year.
Look, and Mark, on the second part of the question, look, I think between these two surfaces, you pretty much you're covering the entire breadth and depth of what humanity can possibly do. So I think there's plenty for two surfaces to tackle at this moment. Obviously, you are right. Search is more information focused, and we think of the Gemini app as more your assistant, a more personal, proactive, and powerful assistant for every aspect of your daily life. And so you can imagine wanting to code deeply or create a long video, etc. Those things can be done by the Gemini app today better. Over time, like we've always done, we've gone through these evolutions before. Like as you point out, we can understand user intent better and abstract some of the complexity for our users. At one point, people used to go to query separately for text, differently from images, differently from videos, etc. And we kind of made it all seamless with universal search. So we have the experience of being able to bring together experiences in a way that makes sense for users and do the heavy lifting for them. But I think, when you're in this early stage of new emerging paradigms, I think we want to make sure, we can meet them where what they are expecting today. And over time, I think it'll give us an opportunity to serve them better. So I think that's how we are thinking about it.
Okay, thank you.
Our next question comes from Ken Gawrelski with Wells Fargo. Your line is now open.
Thank you very much. Two, if I may, please. The first on cloud. I'm just hoping maybe you could clarify your back half outlook. Given last quarter, you talked about some supply constraints that would ease towards the end of 2025, but yet you put up a really nice acceleration in 2Q. Now you're talking about some supply constraints easing into 26. If you could just clarify a little bit on the back half outlook for cloud, given the strong results in 2Q. And then the second is a bigger picture question, which is an agentic experience. Does it democratize the web like search did 2 decades ago, enabling discovery in the long tail? Or does it lead to more concentration with a smaller group of vertical winners? Would love it if you could opine on that. Thank you.
Okay, on your first question on the cloud second half outlook and the comments I previously made on with regards to where we're going to see the capacity increase. So obviously we're working hard to bring more capacity online, which means data centers and servers are coming online. And we see more of an increase towards the back end of the year. But we're increasing capacity with every quarter that goes by, as you can see with the growth rates we've had both this quarter and in the previous quarter. As Sundar mentioned earlier, this is not the type of investment that's a light switch. It takes time to make this investment. So what you're seeing now is investment we made some time ago that's now translating to additional capacity coming online, but more of that towards the back end of the year. I will say it's important as you think about cloud growth, not to think about this in a linear fashion, because the quarter-on-quarter growth rates could depend on the timing of capacity delivery and when that comes online. So that could move a little bit from quarter to quarter.
Look, on agentic experience, look, I think there was an earlier question on the technology aspects of it and how we are making progress. Obviously, there is the value proposition for all the players involved, and I think that's going to be an equally important thing to create the unlock here. And I do think, over time, users will, it's clear to me as we make progress on the agentic experience, it's going to be a much better experience for users, right? And so you'll find savvier players leaning into these experiences, and that'll help them grow and meet this moment. And I think, I do think it's an opportunity for some of the players. And so you are right, just like the early days of the web, there are aspects about it which will expand access, grow the use cases, etc. And I think that elements are there. But I do think it's important. It's not just a technology play, but we have to solve the business models for the varying players involved. So, and I think that's going to be an important part of this evolution as well.
Thank you.
And our last question comes from Justin Post with BAML. Your line is now open.
Great. Thank you. A couple for Sundar. First, looks like the subscription businesses are all tracking well. And, certainly Gemini 2.5 has got some much good reviews. How are you doing with Gemini subscriptions? I know it's a focus area for the company, and anything you can kind of do to accelerate the consumer subscriptions of Gemini within Google One. And then secondly, just on the course change of CapEx, obviously a bigger increase, which appears to be because of cloud demand, but just your comments on cloud ROI and I'm sorry, CapEx ROI. What gives you confidence that you're going to get good returns on that spend? Thank you.
Great. Look, on the first thing on subscriptions, we've definitely, Google One has been an attractive value proposition powered by storage, but with now our AI plans, including both Pro and Ultra, and particularly with the 2.5 series of models, we've definitely seen accelerated traction. So it was a very healthy quarter. And so we are definitely excited about the opportunities ahead. And you will find, through this moment, I think we'll be able to drive growth in that area based on our AI offerings. And so it's definitely an area we are both excited by, and we are actually seeing traction, particularly in the last quarter, ever since we introduced 2.5 Pro. So we are excited about the trajectory there. On the CapEx on the cloud side, look, I think we are definitely investing because we are delivering a lot of value through our cloud offerings. And I think it's important to understand, as we build more and more of an install base with Google Cloud, we have very high customer satisfaction. Our churn rates are very low, and we are much more efficient in the investments needed to grow those lines of businesses. So you're seeing all that play out in our margin trajectory, particularly if you look at it annually, sequentially over the past few years. And so all that gives us confidence as we are investing in this. We'll be able to have a healthy ROI on our investments, and particularly in this AI moment. There's definitely the value we are delivering to the customers is also growing pretty significantly on a forward-looking basis. And so I think all that, will help us, do well here.
Thank you. And that concludes our question and answer session for today. I'd like to turn the conference back over to Jim Friedland for any further remarks.
Thanks, everyone, for joining us today. We look forward to speaking with you again on our third quarter 2025 call. Thank you, and have a good evening.
There we go. Wonderful stuff. Okay, that's the end of the Google earnings. So there's a few updates to give you before you go. So stand by as I prepare a few things for you. Going to like this. So if you haven't yet tapped the like button, please do. We are giving away $1,000 of XRP, which of course you can sell as cash, entirely up to you. Consider subscribing. If you'd like to win and be in our competition, it's martynlucas.com/giveaway. It's free to enter. Free for all. There's no catch. It's my real money. And we were giving away mine, Sensei's and Vaz's live to you on the show. There's the giveaway. It's free to enter, free for all. You can win by just doing one ticket, or you can do as many tickets as you like. It's entirely up to you how much you want to win. Also, how badly you want to win. The more tickets you get, the more chance you've got of winning. Also, you'll see pinned to the top, meet the CEO. Meet the CEO. Today, we gave you a great CEO, members only at first for the first hour, and now it's available to general subscribers. It was this one. There are many more planned. It was this one. It's Mobix Labs. Mobix Labs is here, and this is what happened. Look at this. We announced the CEO was coming on the show, and this happened. It rallied and rallied and rallied 51%. This happens regularly when we do these CEO events. If you've watched it before, you will know. It rallied and rallied and rallied, and then it started to sell when the call began. It started to sell this morning. There we go. And right here was an important question. It actually went red. It was sort of down here. Doesn't really show it here. It was a couple of percent down. Went down, and I said, this question will change the direction of Mobix. If you want to go and see the video, you'll see what the moment it happened. It's pinned to the top. And I said, at this point, depending on your answer, the stock will rally. And it did. The answer was given here. If you go and check it, you can see exactly at this precise moment on the video. It's Meet the CEO, now available to all. It's pinned in the top. Go and check it out. And ever since then, it's been rallying, going up. It was a good story. I hope you liked it. The answer was great. And I said, literally, on this news item, the stock will move. And it did. You can go and see that. Literally, I caught that moment. It was quite amazing to watch. Anyway, there you go. That's it from me. We're now going to go over to the extra channel. If you want to join me for debate and conversation, let me do some live Q&A as well. Let's go into the chat. During tonight's show, I was buying heavily in Bitcoin and XRP. I also used some margin to buy the S&P 500, knowing tonight would be good, knowing we've now got a deal with Japan, knowing one that's coming with Europe. I remember I'm buying 4% of my portfolio in the in crypto now to give away. It's giveaway money essentially, so I can do that. So when the portfolio is going up, I can buy more and I can buy these dips. So what did I do? Let me show you now my full crypto position. There's my full balance, 261. I've got $9,786 in crypto, XRP and Bitcoin. This is my giveaway money. That's essentially your money there that I'm prepared to give to you. That's what I'm doing, trying to build that up. So what did I do? I'll show you what I did. If I go to my XRP, it's been going down and I've been buying bigger and bigger as it goes down. Remember, I do not focus on price. I focus on value. In fact, I've just realized something. I want to turn this into a quick short, a quick video on X. So let me do that now. Let me do that. I forgot that. I should have done that. Okay, so this is just a quick one. I will come back. Trump is speaking about AI, live right now. Let's have a look. Have a quick look. Zoom in.
Right in front of us because we just went through this entire process. I have no doubt we'll be able to find some. I have no doubt we'll be able to cut some more mandatory spending. That's what reconciliation is all about. But I actually think it's dangerous to focus on reconciliation.
Are they showing somebody while the president's talking?
This budget that we have to do,
ridiculous
no matter what happens with the second reconciliation, we have to get to 60 votes in the Senate. We cannot dismiss this idea that this next step is not going to require bipartisanship.
And I get it. Giving me his opinions on it.
If you're Chuck Schumer, he did the right.
When people do that, what's the point of that?
Deals in Alaska.
Here we go.
That's the mother lode. That's the big one, and we're making deals with various Asian countries that.
Apologies for audio. It's bad audio for Trump again.
But Asia is very close.
Let me boost it for you.
To Alaska, relatively speaking. Not the closest, but it is much the closest when it comes to oil and gas and energy, and we're making some incredible deals.
It's very bad audio.
Chris is fantastic, works in partnership.
You can never get good sound engineers. They always do a bad job.
Who's the head of all of, you've got the land and he's got the energy, right? But they formed a great partnership, Doug. So that's one of the greatest.
Donald Trump giving information on AI.
Hand in hand, and they have done a great job. Administrators, Kelly Loeffler, I think, is here. Kelly, thank you very much. Hi, Kelly. Hi, Kelly. And probably the most important man in the room, and I say it in all sincerity, more important than Doug and Chris and all that energy they're producing. He's a man that produces fast permits on the environmental impact statements. He gets them done. I said, Lee, you have 1 week for nuclear, and you have a couple of days for oil and gas, okay, for the approvals. And we kid, but, you know, he really is. He's knocking them out fast. He's knocked out a lot. A lot of you guys have started your plants already, and you've already had your approvals. So where's Lee Zeldin? Is he here? He is so great. This guy, he is so great. That's why he has a slightly better seat than I gave to Doug, you see? He's doing a fantastic job in a lot of ways, but he's doing a great job. And he's getting fast permits and safe and good and everything else, but he's moving them along rapidly, already given some. And, you know, one of the most exciting things we'll talk about in a second is the fact that you're going to build your own electric producing plants when you build whatever you're building. And it's different things, including automobile factories, which are going up all over the place. You'll see them starting soon. They're moving into our country because of the tariffs, because they don't want to pay the tariffs. They're moving into our country at a record speed. But the ability to build your own electric plant, not having to rely on a 100-year-plus old grid. And then if you have electric capacity extra, you're going to sell it into the grid, make some money, but you'll sell it right back into the grid. Director of the Office of Science and Technology Policy, Michael Kratsios. Michael, thank you very much. Thank you, Michael. As well, it's supposed to be taking a vote right now, a big vote. Senator Ted Cruz. Is Senator Cruz here? Oh, look at my senator. Why aren't you voting? I think we lost David McCormick, who's voting. So is David here? Because you're supposed to be voting, Ted. I don't know. I'll tell you what, this man works hard. Ted works hard, and he works good. And a very special thanks to some of the top industry leaders here, including somebody that's amazing. I said, look, we'll break this guy up. This is before I learned the facts of life. I said, we'll break him up. They said, don't say it's very hard. I said, why? I said, what percentages of the market does he have? So he has 100%. I said, who the hell is he? What's his name? His name is Jensen Huang, NVIDIA. I said, what the hell is NVIDIA? I've never heard of it before. He said, you don't want to know about it, sir. I figured we could go in and we could sort of break him up a little bit, get him a little competition. And I found out it's not easy in that business. I said, supposing we put the greatest minds together and they work hand in hand for a couple of years. He said, no, it would take at least 10 years to catch him if he ran NVIDIA totally incompetently from now on. So I said, all right, let's go on to the next one. And then I got to know Jensen, and now I see why. Jensen, will you stand up? What a job. What a job you've done. Yeah. Great. He's a great guy, too. Lisa Su of AMD. Lisa? Thank you. Congratulations. Great job. Sham Senekar of Palantir. We buy a lot of things from Palantir. Where are you? Are we paying our bills? I think so. We just made a deal with the European Union where they're going to pay the United States of America 100% of the cost of all military equipment. They're going to ship it to the European Union, and then they'll distribute it, and much of it will go to Ukraine. It's been a long time since you've heard those words, because we're in for $350 billion. But now we send it to Europe, and Europe pays, and they were great. We had a tremendous NATO meeting a few weeks ago, and it was pretty amazing, actually, what happened. They agreed to go from 2% to 5%, and they had 2% where they didn't pay. They have 5% where they've already paid. That's a big difference. That's trillions of dollars, actually, trillions. But they're going to spend that money in the United States with our defense companies, and we're going to send it to them, and they'll distribute the equipment that we send. So that's the way it should have been 3 years ago, frankly. And Jeff Sprecher, the other half of that incredible family, is he here? Is he here? He's a fantastic guy, international, intercontinental exchange, and he's been a friend of mine for a long time, the husband of Kelly, who's really doing a good job. You are really doing a good job. Small business, which is actually big business if you add it all up, right? It's probably the biggest bank there is, but they call it small business, and she's done a fantastic job. Thanks, Kel. Say hello to Jeff. As we gather this afternoon, we're still in the earliest days of one of the most important technological revolutions in the history of the world. Around the globe, everyone is talking about artificial intelligence. I find that too. Artificial, I can't stand it. I don't even like the name. You know, I don't like anything that's artificial. So could we straighten that out, please? We should change the name. I actually mean that. I don't like the name artificial anything, because it's not artificial. It's genius. It's pure genius.
He's got a point there.
And its potential to transform every type of human endeavor and domain of human knowledge, from medicine to manufacturing to warfare and national defense. Whether we like it or not, we're suddenly engaged in a fast-paced competition to build and define this groundbreaking technology that will determine so much about the future of civilization itself, because of the genius and creativity of Silicon Valley. And it is incredible, incredible genius. Without question, the most brilliant place anywhere on earth. America is the country that started the AI race. And as President of the United States, I'm here today to declare that America is going to win it. We're going to work hard. We're going to win it. Because we will not allow any foreign nation to beat us. Our children will not live on a planet controlled by the algorithms of the adversaries advancing values and interests contrary to our own. We don't want to have contrary interests. We want to get along, and we'll get along with other countries. We're having a great relationship, as I told you, with those countries that we mentioned, with Japan and Indonesia and so many others. The European Union, we're getting along very well with China. A lot of respect for President Xi. We have a great relationship, and we'll see how it all works out. But we're getting along with countries it's really been pretty amazing, I will say that, and it's a good thing. It's a good thing, not a bad thing. So from this day forward, it'll be a policy of the United States to do whatever it takes to lead the world in artificial intelligence, such an important thing happening. This is really something that nobody expected. It just popped out of the air, and here we are. But we will defend our nation, our values, our future, and our freedom, and it will be really great. But what we really need to be successful is a very simple phrase called common sense, and that begins with a common sense application of artificial and intellectual property rules. It's so important. You can't be expected to have a successful AI program when every single article, book, or anything else that you've read or studied, you're supposed to pay for. Gee, I read a book, I'm supposed to pay somebody. And, you know, we appreciate that, but you just can't do it because it's not doable. And if you're going to try and do that, you're not going to have a successful program. I think most of the people in the room know what I mean. When a person reads a book or an article, you've gained great knowledge. That does not mean that you're violating copyright laws or have to make deals with every content provider. And that's a big thing that you're working on right now, I know, but you just can't do it. China's not doing it, and if you're going to be beating China, and right now we're leading China very substantially in AI, very, very substantially, and nobody's seen the amount of work that's going to be bursting upon the scene, but you have to be able to play by the same set of rules. So when you have something, when you read something, and when it goes into this vast intelligence machine, we'll call it. You cannot expect to every single time say, oh, let's pay this one that much, let's pay this one. It just doesn't work that way. Of course, you can't copy or plagiarize an article, but if you read an article and learn from it, we have to allow AI to use that pool of knowledge without going through the complexity of contract negotiations, of which there would be thousands for every time we use AI. We also have to have a single federal standard, not 50 different states regulating this industry of the future. And some people would say, gee, that's an unpopular thing to say. I was told before I got up here, this is an unpopular thing because some people, they don't want that. But I want you to be successful. And you can't have one state holding you up. You can't have 3 or 4 states holding you up. You can't have a state with standards that are so high that it's going to hold you up. You have to have a federal rule and regulation. Hopefully you'll have the right guy in this position that's going to supplant the states. If you are operating under 50 different sets of state laws, the most restrictive state of all will be the one that rules. So you could have a state run by a crazy governor, a governor that hates you, a governor that's not smart, or maybe a governor that's very smart, but decides that he doesn't like the industry and he can put you out of business because you're going to have to go to that lowest common denominator. We need one common sense federal standard that supersedes all states, supersedes everybody, so you don't end up in litigation with 43 states at one time. You got to go litigation free. It's the only way. And we also have to watch Europe, Asia, and all foreign countries so that they don't make rules and regulations that likewise make it impossible for you to do business, and where you'd have to make everything in AI cater to them, because again, you'd have to cater to the toughest country or to the toughest state. You can't do that because it would ruin it. I just terminated all of the, as an example, California car emissions rules, which were a disaster. It cost them just billions of dollars as an industry, but thousands of dollars per car. The emission rule standard, because they were making the production of an automobile almost impossible and at a tremendously higher cost, much more expensive than it should cost, for very little gain, for actually, in my opinion, negative gain. The automobile was worse. Under this administration, our innovation will be unmatched and our capabilities will be unrivaled. And with the help of many of the people in this room, America's ultimate triumph will be absolutely unstoppable. We will be unstoppable as a nation. Again, we're way ahead and we want to stay that way. We can't let individual smaller units stop it, because that's the only thing that can stop it and can really mess it up. As with any such breakthrough, this technology brings the potential for bad as well as for good, for peril as well as for progress. But the daunting power of AI is it's not going to be a reason for retreat from this new frontier. On the contrary, it is the more reason we must ensure it is pioneered first and best. We have to have the best, the first pioneer. We are the best and the first pioneers, and we're going to be really putting a nation that we love, America, we're going to be putting it first. I have an expression, America first, make America great again. A lot of great expressions, but they're all so true. To make America great again, we're going to make this industry absolutely the top, because right now it's a beautiful baby that's born. We have to grow that baby and let that baby thrive. We can't stop it. We can't stop it with politics. We can't stop it with foolish rules and even stupid rules. At the same time, we want to have rules, but they have to be smart. They have to be brilliant.
Come on, Bitcoin XRP. I bought big today. Transform my portfolio if this comes well, and it will. Just got to give it time.
Them and transcend them all. We are Americans, and we are Americans first. I have a couple of people I know that don't happen to be from here, but I wish you a lot of luck anyway. I was looking at 3 people that are not Americans, but they're very good people. Please treat them nicely. But we do not shrink from the future or cower in the face of uncertainty. We dominate the future. We conquer new frontiers, and we control our own fate, and we determine, by doing that, our own destiny. Winning this competition will be a test of our capacities unlike anything since the dawn of the space age. I believe that. It's hard to believe as the president, the amount of enthusiasm for this one industry. I mean, I can talk about cars where we're doing incredibly well. We have car companies moving in all the time. But I talk about other industries. Everybody's saying this is going to dominate the world. It's going to dominate every industry that ever conceived. I don't know if that's true. I don't know if it's true. But I can tell you that a lot of very brilliant people think it is true. It'll dominate everything. It will challenge us to marshal all of our strength and flex the muscles of American ingenuity and resolve like probably never before. It will require us to blast through obsolete systems, cut through thickets of regulation. We've got to get rid of some of the regulation, but we want good regulation and rebuild the industrial bedrock of our country. And perhaps most importantly, winning the AI race will demand a new spirit of patriotism and national loyalty in Silicon Valley and long beyond Silicon Valley. For too long, much of our tech industry pursued a radical globalism that left millions of Americans feeling distrustful and betrayed. And you know that. Everybody knows that. Everybody in this room certainly does. Many of our largest tech companies have reaped the blessings of American freedom while building their factories in China, hiring workers in India, and slashing profits in Ireland. You know that? All the while dismissing and even censoring their fellow citizens right here at home. Under President Trump, those days are over. We need U.S. technology companies to be all in for America. We want you to put America first. You have to do that. That's all we ask. That's all we ask. To partner with our tech geniuses in achieving this vision today, we're releasing the White House AI Action Plan. Big stuff, signing it right after this. In fact, I see it sitting right there. Maybe I should just sign it right now. Who the hell has to make the rest of the speech, right? But here are the pillars of the strategy. First, my administration will use every tool at our disposal to ensure that the United States can build and maintain the largest, most powerful, and most advanced AI infrastructure anywhere on the planet. America needs new data centers, new semiconductor and chip manufacturing facilities, new power plants and transmission lines. And under my leadership, we're going to get that job done, and it's going to be done with certainty and with environmental protection and all of the things that we have to do to get it done properly. Virtually all of these large capital investments can be and should be made by the private sector. And they want to do that. They just want to be able to do it. But for that reason, America must once again be a country where innovators are rewarded with a green light, not strangled with red tape so they can't move, so they can't breathe, and that's not going to happen. You're going to see things that you've never seen in this country before. So often, and I've been watching for many years, I've watched regulation. I've been a victim of regulation. A zone change that takes 6 years for a building in Manhattan or whatever. But I was good at zone changes, but it took a long time. By the time you got the zoning, the market changed. You didn't want to build the building. You say, well, but in some cases that made you lucky, didn't it? Huh? In some cases, not too many people understand that in this room, but in some cases, waiting for that approval as the market collapsed was a good thing, not a bad thing. But it's time to reclaim our heritage as a nation of builders, and that's why, upon taking office, I signed a historic executive order directing that every one, and this is so important, for every new regulation, 10 old regulations must be immediately eliminated. So we have old regulations that clog up the books that don't even mean anything anymore. You know, in my first term, I had more regulation cuts than any president in history times 4, and that included 2-term presidents where you're talking about 8 years. We had more than any other president, and I think we may even top it this year. We may very well be able to top it during this period of time because you're really, you are a regulation-prone group. And we're looking to get those regulations out of your way so you can use your genius. Earlier this month, we also enacted the largest tax cuts in American history when I signed the One Big Beautiful Bill into law. And I think the most important thing in the whole tax cut in terms of pure economics, and I think one of the reasons that my first, we had the most successful economy in history during my first term, and I think this is going to blow it away. So far it is, and I think this is going to blow it away. But the reason we had was I had expensing at 100%. And what we did is we included 100% in this bill, expensing for all capital expenditures, including investments in factories and equipment and structure. Structure wasn't included last time, so even structure, and you're able to write it all off immediately. That's the biggest thing, not 38 years, not 42 years. You're able to write it all off immediately. And this time we've made it for 10 years, not for 1 year. We've made it for 10 years, so you have a much longer period, but I'd say get out and take advantage of it. I think that's one of the reasons that we had such an incredible success with the first tax cuts. And one of the things that this bill does is it extends the first tax cuts and makes them permanent. And in addition to that, we were granted other taxes like no tax on tips, no tax on Social Security, no tax on overtime. A lot of great things. One of the things that I mentioned, not so pertinent here, but if you're in the automobile business, it's pertinent. I said, why is it that people like us always are looking for expenses and deductions, and people that buy automobiles that really have to go out and borrow money to buy a car, why aren't they allowed to deduct the interest on their loan to buy a car from their income tax? And we got it approved. We got it approved. And that is such a big thing. And I think that's going to be such a big thing for the automobile industry. We're going to be making more cars. Within a few years, we're going to be making more cars than we made in the very beginning, in the super prime. We lost almost 50% of our automobile business to Mexico, Canada, and various other places, as you know, in Europe and in Asia. And now we're getting it back. We're getting it back in record numbers. And I think we're going to be topping any amount. In a few years, we'll be making more automobiles than we've ever made in the history of our country, including what I call prime time. My administration is also pursuing a future of all-out American energy dominance. And on day one, I terminated the Green New Scam. You know what that was? You were all victims to it. Perhaps the second or third greatest scam in the history of our country. I would say the first was Russia, Russia, Russia. And we had a couple of others too. But the Green New Scam was one of the greatest. It's so ridiculous what they've made you do. The carbon footprint. They talked about the carbon footprint, and then Obama hops onto a 747 Air Force One and flies to Hawaii to play a round of golf and comes back. What about the carbon footprint? No, we didn't like that. And what Biden has done is absolutely terrible. He made it impossible, almost impossible for people to do business, not even talking about the border, where millions and millions of people flowed into our country, many from prisons, from jails, from gangs, from mental institutions all over the world. No, we're not doing that. We have to get them out. We've got 11,888 murderers, many of them committed more than one murder. Many of them, more than 50%, committed more murders. We're getting them out of our country, or in some cases they're so bad, we're not getting them out. We're having to lock them up because we don't want them ever to come back, no matter how good we're doing. Last month, you probably read, we had 0 people enter our country illegally. And over the last number of years, you'd have hundreds of thousands, literally hundreds of thousands of people a week pour into our country, totally unvetted and unchecked. And what the hell were they thinking? What they've done to our country is so sad, and we can never forget it. But we're unleashing all forms of energy, including natural gas, oil, and clean, beautiful coal. I instructed my people, in the form of Chris and Doug in particular, you are not allowed to say the word coal without saying clean, beautiful in front of it. You can only say clean, beautiful coal. It's a little embarrassing because we had somebody making a speech the other day, right? And he mentioned the word coal about 30 times because that was the subject. And he kept going clean, beautiful. I wanted to say, okay, just take it easy. You could just got a little bit crazy, right, Doug? But it's, China's using it. They're building now 57 big power plants, all fueled by coal. And we have to compete. We have to win. And we're going to have clean, beautiful coal. But we have more coal than any. We have more anything in terms of energy than anybody. Oil and gas. We also have more coal. In May, I also signed an executive order to rapidly begin construction of safe, reliable nuclear reactors. That's a big thing now. And many of you are going to be using nuclear. I had problems with nuclear. I saw some of the things, but what they've done with nuclear is like what you've done with AI and other things. It's incredible, actually. It's
okay, folks. I'm sorry, I've got to wrap this up now. We are massively over time. I tried to cover as much of that as possible, but unfortunately, this is going on way past time. We need to wrap this up. So thank you very much. Going to hand you all over to the Extra channel if you want to watch all the clips. They're on my X account. All the highlights of everything you've watched today are all on X. There is my X account. Don't forget the giveaway as well. It's in the chat. But that's it. I'll see you back in the morning. Tomorrow morning, I don't think we've got any earnings calls booked. No one has booked one for the morning. But that's it from me. I'll send you over to the Extra channel. Have a wonderful evening. And I will see you back very shortly. Until next time, as always, take care of yourselves and each other.